Welcome to Behind Closed Books, the podcast where business owners and experts reveal the financial decisions that shape their success. Each episode brings you unscripted stories of turning points, hard calls, and the numbers that changed everything to pivot, recover, and grow. If you're building a business and ready to think differently about profit, pressure, and progress, behind every smart decision is a story worth telling. This is the show. Here is your host, Craig Sheets.
Hello, everybody, and welcome to another episode of Behind Closed Books. My next guest today started a boutique forensic accounting firm, and we're going to learn more about that terminology today. I'm excited to teach everybody if they don't know or refresh people that do know. Personally, he discovered documentation linking a bank to Enron's, and I'm going to probably say it wrong, Mahonia transaction. And if you remember back to Enron, what a mess that was. It was like a feather in the cap for some people, and other CPA firms did not fare well after that. That led to the bank settling litigation immediately. He's been recognized internally for finding a needle in a proverbial haystack in his investigation styles. He's worked for KPMG, big public accounting firm. Back when I was going to school, it was Big 10, Big 8, Big 5, Big 4. And he's known internally as a flexible, adaptive auditor working across multiple business lines. He joined PCL Construction and spent 11 years there. They're a $10 billion construction firm. He was known for rapid problem solving. Subsequent to PCL, he built a multiple high-performing accounting finance team from the ground up. His current role is CFO at Breckhouse Tile and Stone. He has an undergraduate degree in finance and master's degree in accounting. He's been a licensed CPA in the state of Colorado since 2006. He's been a guest lecturer at the University of Denver. He skis, actively practices Brazilian Jiu-Jitsu. We'll have to hear a story about that. Never heard of a Jiu-Jitsu CPA before. This will be a fun one to hear about. Been practicing for 20 years, as a matter of fact. He's a second-degree black belt. Known for showing up to KPMG with a black eye and cauliflower ear. Often teased as the least accountant-looking accountant. With that, welcome my next guest, Justin Norton. Welcome to Behind Closed Books, Justin.
Hey, Craig, it's great to be here.
I am really excited. There is so much to unpack in that intro. I mean, this should be really fun. So what I thought I'd do is take another minute or so and kind of go over some of the topics so our guests know what we're talking about. And our listeners, I should say, know what we're talking about. So give me a minute here to kind of go over some topics, and then we'll dive right into it. We really should probably unpack maybe just what a CFO does. A lot of people may know what that is, some may not. But let's talk about that, and then maybe a little bit more about your unusual profile, jiu-jitsu, creative versus traditional accounting, working international, and then corporate accounting turnarounds, reducing audit time from 5 months to a month and a half. I mean, that sounds impossible. That's a really interesting story right there. Private equity, construction. A lot of times people hear those words, but maybe they don't know what's entailed in each one of them. So we can talk about managing PE expectations, operating major construction projects. And there's a lot to do with construction right now. Things are growing, and it'd be great to hear more about that. Leadership and finance, how to hire and build great teams. Doesn't everybody want to do that? That's the goal of every business owner. So that'd be great to hear about mentorships, KPMG partners, managing directors, and a topic near and dear to everybody's heart, AI and finance. Is it going to take my job? What's going to happen? It's a scary, scary thing, but I think we can use it to our advantage rather than lose our jobs. And then forensic accounting. We talked about the Enron-related Mahonia transaction, and I think we can talk about what, at the very high level, public accounting firms have to do for public companies in the way of finance or filing things, Edgar, et cetera. But let's start with you. You're a CFO with an unusual profile. Tell us more about you, what you do, and kind of explain better your history.
So I'm a Colorado native, grew up playing hockey, went to DU for undergrad, and then did DU for my master's, was working full time, getting my master's, and then doing night classes. And then after that, I was, studying for CPA exam at night. So when I passed the CPA exam, I was a single guy, and I was kind of like, oh, I got a bunch of free time. What do I do with it? And I saw my first mixed martial arts fight in 1996.
That's early for that kind of those kind of ideas.
Yeah, so it was like that was like when it was still bare knuckle and very, very minimal rule set. Uh, uh, John McCain referred to it as human cockfighting.
I think it was. There's no old bar back then.
I loved watching it, and I was like, I'd kind of like to learn Brazilian Jiu-Jitsu because I grew up watching the Gracies fight, and there was Easton BJJ had opened a location in Denver. I was like one of the first students in Denver in 2006 there, and kind of instantly fell in love with it, and started at KPMG almost at the exact same time. So my professional career and my jiu-jitsu kind of both started at the same time, and
Polar opposites.
yeah. So yeah, I would say KPMG and its clients would occasionally be unnerved when I'd show up with a black eye.
You say, I got to play with an IRS agent on your behalf.
Exactly. So yeah, that was kind of the start for it, and I would say both of those things have been very influential.
I was going to say, with jujitsu gave you some as an outlet, I'm sure, after work, and then obviously working at KPMG at the highest level of accounting I can think of, at a great firm that is. You had the chance to experience, some intellectual advances there, but you get kind of an outlet on both ends, intellectually and physically. That's correct.
Yeah, and I do think that that's really important. I think COVID, because the jujitsu gyms were all shut down during COVID, and that was something I struggled with, not having that outlet for a while, and so yeah, that to me really demonstrated like people need to have some sort of physical outlet with sitting and looking at computers all day. Humans aren't designed to do that. Uh, so if you're not doing something physical, it's going to be problematic for you in the long run.
Absolutely. No, it's huge. And learning about traditional accounting, creative accounting, working KPMG, then at nights working on jujitsu. I mean, you must have been exhausted mentally and physically. It must have taken a lot out of you.
Yeah, but it kept me out of trouble. You're tired to not going to the bars all night.
Yeah, I guess that's a good thing.
Yeah. It kept me on the straight and narrow.
So a CFO now, and I know you've done a lot, but maybe just at a high level, if you want to maybe define what a CFO is. I'm sure a lot of people do know what it is, and maybe some don't, or maybe you want to explain it in a different way that works for you at that level.
Yeah, so I mean, CFO's chief financial officer. Typically, that's your quote unquote highest ranking finance or accounting person within an organization. I would say I've seen the CFOs of today that they're very different than the CFOs of 10, 20 years ago. From the standpoint of I think it was very much like being able to report on the numbers, explain the numbers, and try to forecast those numbers, but kind of staying in that lane. I would say the drive and demands of CFOs now is more closely linked with operations and understanding what the business actually does, and I use the term, what I've been able to do, and I've had a lot of success with it, is I believe that the finance accounting function should be the tip of the spear for organizations. So if I can give operations, HR, the back office, other components of the front office, excellent data that's timely and actionable, uh, people make better decisions, and you start to build that flywheel where everyone's looking at these things, and now they're using data to drive decisions.
Well, it's funny because you think of accountants in the past were always rear looking or looking backwards. I think of managers looking forward and tax people kind of somewhere in the middle. But I think as a CFO, it's a different level than just accounting and bookkeeping, where they are looking forward, but utilizing information from the past as well.
And I mean, the big thing too that like I really enjoyed is as I view kind of the finance accounting function as a service organization within businesses, and that's like kind of my background. Like I've taken a lot of these like Hogan assessments and that kind of stuff, they all say I shouldn't be an accountant. I was like I score off the charts typically in imagination and creativity, which is typically like when we talk about the Mahonia transaction, ends up with federal jail time. But when I was going through that, I had an HR director kind of explain. He's like, no, he's like, you're looking at problems from a different mindset than kind of your typical accountants would. And he's the one that kind of said,
Yeah, kicks things other people wouldn't catch maybe then.
yeah, yeah, well, yeah, and that's like I've always growing up, I would say I got in trouble more than I should have because with school because I would figure out creative ways to get what was required of me done, but to minimize the amount of time I had to do that.
You had to do it. Yeah, high intelligence with creativity finds a way to get through it the fastest way possible.
Yeah, yeah. So yeah, but no jail time thus far.
No, so no jail time. You worked with companies. Basically the CFO has changed quite a bit. You've worked at the highest level of the companies in corporate accounting. I mean, I view corporate accounting because our firm, we're kind of the people that provide the data to maybe somebody like you. We'll provide the accounting and the bookkeeping and the financials in a very organized and accurate manner to feed to a CFO or a controller, more of a CFO. And then tax planning, we do tax planning as well. So you might do some tax planning, but I think the data that's fed to you at the corporate accounting level is important because if you don't have the information to make decisions or you have bad information, then you're just not making good informed decisions. I imagine that's super important to get to you.
You hit the nail on the head, and everyone like in the AI stuff, it's amazing. I use different pieces of AI essentially every day at work and in my personal life too. The data has to be dead on. You have to create rock solid, dead on processes that you can, for all intents and purposes, blindly rely on. And if you don't have that level of data integrity, you're wasting your time with any of the AI and those components. And I feel like sometimes CFOs and executives can get kind of bedazzled with a lot of these KPI you know visualizations and if your data sucks or if you've got an incredibly time consuming manual process to get those dashboards, like you've got a bigger issue that you need to address. And just that's where the real work comes in. And a lot of the times people don't want to put in that work. It's not glorious, it's not exciting, and but you have to build that base.
You kind of help fix collapsing finance functions and help if you see issues, you kind of help bridge it and make it stronger, more like a foundation in ways. Is that something you look at when you start with a company?
Yeah, and that's it's if I cannot get data out of the ERP, out of whatever financial reporting solutions that they have, or if I'm looking at processes and it's I'll give you an example. I was at an entity, and it would take at least 12 hours to do the ASC 606 revenue adjustment on a construction WIP. It required a 62 megabyte Excel file. 62 megabytes, not gigabytes, but it's 62 megabytes. So technically I was breaking, it was timing out when I was feeding it to the public accounting firm's portal because I couldn't email it. And so that was the process that they had. And I was like, this is right. And it was highly manual. And so I mean, but it gave them like some pretty data that they liked looking at, but I'm like the process to get it was
It wasn't functional. It was overly not flowery, but again, as accountants and CPAs, you want to have the numbers right. But you add all these things on top. It's like, yeah, that's great, but just need a few key metrics, and that much data would be just overwhelming for somebody.
And that was, I dug into it, figured out where all the numbers were coming. And that's where it's, that's the hard work that takes a lot of time to figure it out. But then it's like, okay, I saw what they were trying to do. And then, we had a really great partnership with an ERP solution that fed data directly out of the ERP into Excel and back from Excel into the ERP. And so I worked with that technology group. I get the WIP put into it, built in the calculations within it. It turned it into, a half a megabyte sized file, and it would take about 15 minutes to process that. Uh, and that's I think that's the one thing. A lot of times people come in and especially at lower levels within an organization, and they don't, or just over the years people just stop challenging or thinking about these things, and then all of a sudden it's you're 5 years in and you've wasted a massive amount of time when it just needed a fresh set of eyes to say,
yeah, you do it this way. You can do it. You can get what you want in a different way, or maybe make this report for the managers and this for the accountants, but don't put the two together. A lot of times I notice that's what managers try to do in the process is they try and blend the management reports into the accounting reports, and they belong stacked, but they don't belong intermingled, in my opinion.
Yeah, the accounting stuff needs to feed into the management reporting. And that's, with the PE backed entities I worked at, it was very problematic because, what I was producing through the controller level in terms of everything on the financials, there was disconnect with what was getting reported on like the monthly P&L slide decks. There was a lot of like quote unquote reclassifications of things to make what was in the ERP be in the correct buckets for the PE reporting. And then there's this manual process of having to constantly rec those pieces out. So I mean, you have to build the data, and if there's presentation issues or reclassifications, like ERPs usually have ways to do that to where you're not having to do it manually every single month.
And would you say with PE, which is I'm referring back just to say it out loud, private equity, would you say that private equity firms, and you've worked both with private equity firms and worked, I imagine, in public firms, but do you see private equity firms needing more detail or different levels of detail because their money's involved at a higher level?
Yeah, well, and I think that the PE firms are looking at like, okay, my EBITDA, what is, potentially exit on this, and so it's kind of I would say just from a pure finance accounting perspective, it can be frustrating when they're like, oh yeah, we spent all that money, but it's an EBITDA add back. And they're like, so it doesn't count. I'm like, you spend a bunch of money on something, like it does, like, and they're like, no, it's EBITDA add back, and that was always something I kind of struggled with. That they're like, oh yeah, we had to do a bunch of money on an acquisition and had to redo the cash roll 8 times and have 6 different consultants involved with it, but it's a neat add back. So
it seems to be a waste. And as a tax person, especially because you're on the CFO and the accounting side, I don't know how much you spend on the tax side, which a lot of time I spent on is, there's a lot of aspects to tax as well, like what's deductible, what's not. And then from PE or from the CFO mark, it's good to have different perspectives, and you don't want one tail wagging the dog, so to say, but I think you need a collective mindset of people, especially CFO, accountants, and tax people, to say, right, here's where we are. Here's some avenues we can go down to save some tax. Here's some avenues we can go down from a CFO level to streamline processes. But you just don't want one group taking over to say, right, it's only about the equity and worry about the EBITDA. Well, that's not all it counts at the end of the day. You can't let that one part dictate everything because there's a lot of aspects to one company. So I imagine private equity would be hard to deal with because they view it very, very narrowly, their scope.
They're clearly making money doing it.
They want the money back. That's it.
You can't be overly critical of it because they're obviously making profit for their funds and their principals. But yeah, it was always kind of an interesting thing. I'm like, why do you want to exclude interest and taxes? Because those can cost massive amounts of cash.
Yeah. Huge cash flow drain.
Yeah. So yeah. So I used to always look at like net operating profit after taxes. So I always refer to it as NOPAT for that component.
Oh, nope. Okay. I like that acronym. That's a good one. That's a good acronym. Yeah, because everybody's got their own way of looking at it. And in construction, maybe go back to the higher level of that. A lot of people may not be familiar with whether it's work in progress or percentage of completion method. I'm not sure much familiarity with that. Maybe just kind of go over those if you're at all familiar with those kind of topics.
Yeah, so yeah, deal and work in process schedules a lot. So that's essentially saying I've got these projects. They're over an extended period of time. Sometimes it can be a week. Sometimes it can be, a decade plus. You look at like a massive project like the Panama Canal, like kind of what they did to retrofit and fix that. I mean, that's no, you can spend 20 plus years on a lot of these projects, but it's trying to say how is each of these projects performing financially throughout the life of the project. So you've got, and that's like people, if you've ever had like your kitchen remodeled or something like that, you get a bid, and the construction company says, hey, it's going to be 30,000 to redo your kitchen or whatever it is. So that's kind of your contract value. And then the construction entity is saying, okay, I'm going to charge the customer 30,000. My labor, my material, my overhead, my profit is going to be $15,000 of my costs, and I'll get 15,000 of profit. Customer pays on the first day. They've not done any work. And under ASC 606 and kind of historically that percentage of completion accounting, you're saying on a cost to cost basis. So if I've done 50% of the work from a cost to cost basis, I should recognize 50% of that revenue. So it's the percentage of completion. It's not technically changing the overall profitability of the project. It's recognizing the costs and the revenues throughout the life cycle.
And I imagine that must be really difficult when you're crossing over periods, whether it's fiscal or year-end calendar periods. So if you have a certain percent met by the end of the year, but the whole project isn't complete, well, yeah, you got let's use that example for the kitchen. You got the 30,000, maybe hit the 50% mark in December. Well, okay, you're recognizing 15 now. You're going to recognize the next 15 or 50% in the next fiscal year. So it's important to do that.
Exactly. And the really key thing is when you estimate the cost of the project before you start it, you want to make sure those estimates are really bang on and accurate. Because if I estimate that kitchen's going to cost me $15,000 to complete, and that 15,000 is going to cover my labor, my material, my overhead, my profit, all of those components, and then I get a month into the project and I go, oh my God, I didn't price in this tear out component, or I didn't price out, I didn't have this electrical setup or the plumbing. So now all of a sudden, I estimated the cost is going to be 15,000 and now the cost is 30. And at that point, the project's not making any money.
And that's hard to go back to the customer too. And then you got to price the whole percentage of completion. If there's more midterm, I assume like in that case, if the price goes to 30 to 45,000, then you just work your same percentages utilizing the new number, I imagine.
Exactly. Yeah. So you'll adjust your estimated total cost. That's typically called a change order. So it would be an adjustment to the contract value and then an adjustment to the budgeted total cost of the project. And then once those new data points are in, you redo your percent completion based on your new total cost compared to the revised budget cost. And then that's the amount of revenue. That percentage is the amount of revenue you'd recognize over that same time period.
And being the most important is well, not always important by fiscal, but I imagine obviously monthly revenues are important too. But end of year for tax, again, I got my tax hat on. I want to make sure that the CFO or whoever's running that project is really utilizing the right percentages so that we can then number one know how much revenue would be recognized. And again, I'm talking as a tax person, but what's the tax implications of the plan, and then
Yeah, and that's on the tax side, especially if you're on the multi-year construction side, that could be a giant pain in the ass because you're recognizing, for tax purposes, kind of that percent completion over 4 years. So let's say the project that took 4 years to complete. Well, you were estimating your percent completion for each year end where you were at. Well, the IRS, and this again, it doesn't change the overall profit of the project or the overall quote unquote tax liability to the IRS. But they say, well, we want to make sure that you were recognizing it quote unquote accurately. So then you have to take your actual costs 4 years later and then apply that to your estimated percent complete for all those prior years. So you do this massive look back calculation. And then you say, oh, well, my estimates, quote unquote, deferred revenue recognition to the later years. So then the IRS says, well, you owe us essentially back taxes because you should have recognized that revenue earlier on in the project life cycle than you did.
so if you do 20% in years 1 through 3 and 80% in year 4, they'll say, well, realistically going back, it should have been 25, 25, whatever. You owe us back that extra 40% or whatever the differential. And you got to do amended returns, I imagine, or you just pay the penalty.
No, and it's not really even a penalty. It's just part of the tax return is you just have that look back component. And I mean, vice versa. I have to give the IRS some credit for this. If I recognize too much of that revenue early on and quote unquote paid the taxes, then you get a quote unquote refund with that.
Okay, so if you did the opposite, 80% upfront and then 20% over 3 years accidentally the wrong way, that's good. So they're at least fair. See, I want everybody to see here the IRS can be fair.
Well, the rates are different. What they'll pay you.
Everyone thinks the IRS can't be fair. I got to advocate for them once in a while, but that's fine. So I imagine being in leadership in finance and managing a team must be really hard. What are some advice ideas you have for people for building and hiring a good team in the finance world?
I would say a big component is a lot of the times hiring managers fixate on a specific skill set or a specific ERP that someone works on. And when you do that, you're throwing the baby out with the bathwater. This was a long time ago. I had applied for a recruiter reached out to me and they're like, oh my God, you're perfect for this role. I checked the box on everything for the role. And they wouldn't even they told the recruiter, well, we won't interview him because he's not used this ERP, this specific ERP.
It's wasted knowledge you have because of an ERP.
So that's, I would say, the big thing is the other thing too is try to partner with external headhunters. I know that there's the cost with that, but this is all that these people and organizations are doing. And so if you're at a smaller entity, you don't have like a really robust like in-house recruiting, hiring, HR function. Reach out, have those conversations, and that I can tell you, a number of the people that I've hired to build out really good teams have come through recruiters that I've known for years. So the advantage of that is those recruiters know me. They kind of know my management style. They know the kind of companies I've been at. And they can marry because it's like, some people would love getting to work with me, but there are other people that would absolutely not be a good fit.
But it's good to know that, though, and to work with someone that does know that is important, because synergy and working together and cohesiveness is important, especially when you're building a team. You're working with numbers. You'll be working close together, talking every day. You got to have that, a good fit, personality and otherwise. That's important. Do you find milestones work with when you're building a team, whether you're trying to do any kind of like, we're going to learn something new or you're going to reach these goals, or do you kind of have them work on their own? There's a word they used to use, success path, but I know there's better words for that, for working on advancing themselves.
Yeah, and kind of like in that regard, I think having good open communication with your team and kind of letting them be part of developing what the big picture looks like, you get a lot more buy-in and ownership with the team, and they actually understand, why we're doing what we're doing. I've come into a number of organizations that the work in process is kind of a nightmare. Because a lot of the times, especially in construction, people they want to go build the project. They don't want to put numbers into an ERP or really look at that. So I've come into organizations and PMs can be sometimes resistive about accountability around the whip. But if you show them why these things are important and why it matters that your budgets and your cost codes are hitting to the same lines, so you can understand, am I winning or losing on this aspect of a project or that aspect of the project, and working with them and trying to show them how they can use the whip, use the data to make better decisions and to have a better understanding of the project's performance.
Teaching them the big picture, teaching them the software, but also allowing them to buy into the process is a great tool to use to help manage people, because they feel then vested in their own success and their own paths, and they can use you as a sounding board, whether they don't know how to do something or if they have to do a webinar or CPE. I'm sure it's more detailed than that, to learn something new. That's all part of the process, because not everybody knows everything, and you just know we should. But as long as you have the good fundamentals, you can build off of that. And with a good personalities, then it's a good fit, symbiotic fit for everybody.
Yeah, no, absolutely.
Did you work with any, you said mentioned the mentorships? Was it at KPMG or was that at other organizations?
So yeah, I was heavily involved with college recruiting for KPMG at the University of Denver. I already had good connections to the school because I went there. I knew all the professors, I would say I've had a pretty good knack for identifying good talent even that early point in my career. Yeah, there's I think two or three of the people that I recruited hard, and one individual, someone else on the recruiting team was not impressed with this person, and I really fought to get this person at KPMG, and they're a partner now. Yeah, and managing directors and they've all done really good stuff. But I think the biggest thing is people like I always try to hire people that are more talented and better at whatever it is than me.
I imagine most people are intimidated by that, though.
And it's so backwards. So it's like you get extremely, and that was when I was at KPMG. I would try to be very flexible with when I was staffing jobs. I'd be like, this person's really good. I'm going to offer them some flexibility that maybe some of the other seniors, or some cool travel opportunities. So I would try to actively poach and get those people on my projects, and they're it's another person I would staff on all my projects, and they're a partner as well now, and that's I would always tell people, I'm like, oh yeah, way better at accounting than I ever could be.
And I think people are afraid to bring people on like that. Oh, he's going to take my job, or he's going to take knowledge from me and going to succeed more. But it's like, good, let them succeed. There's room for everybody in the accounting field.
Because it's like all ships, rise and fall together. And so it's like we get audits done on time, ahead of budget, and then everyone's thrilled with it. But yeah, that's kind of an interesting thing that people, they don't want to really hire people that are more competent or capable than they are. And my approach has been like, I yeah, I had met somebody for a happy hour that I used to work with, and I told them, I was like, man, I'm like, I look forward to working for you someday, and I genuinely mean that. Only talented, just younger in the career, and I'm like, they're gonna crush it.
That's awesome. And then I'd be remiss if we didn't talk about staffing and individuals and not mention AI and people's fear around AI, thinking it's going to take everybody's job in the whole world and there's no way you can work with you and not add, it can add value, but it's going to end up taking people's job. But what's your feeling with AI in finance? And I know at the individual level, it does help, but where do you see it leading to in the future? Or do you have any insight on it or any thoughts?
So, I think it gets back to what we talked about kind of at the beginning of the conversation. If you don't have really good business processes and really good data within your systems, the AI stuff is just junk. And I do feel that a lot of people view it as it's the new shiny thing. It's the fun buzzword to talk about. I will tell you, my email inbox, my LinkedIn is flooded with people that their AI can literally do everything for everyone all the time. And when you really start to press it, it's not really doing what it is. I think it is going to be transformative. I use it every day. There are a ton of ways that you can leverage it. And kind of what I had seen in an article, they said AI isn't going to take your job. The person that knows how to weaponize and use AI will take your job.
Oh, wow. That's an interesting point. It's the person, but it's going to be a person behind it, but they're going to use it as a tool as rather.
Because it's like if there's, I mean, there's all sorts of stuff that I've used AI for that's saving. I even have a quick plug to, it's called Sanebox, Sanebox. It's like AI tool that sits within your Outlook, and it gives me all these different categories because I'll get 200 to 400 emails a day, and probably 15 to 20 of them are like really pertinent that I need to take care of kind of immediately. So that's a massive slog during your workday. You go to a meeting, you come back, you got 70 emails. It's like, oh God, I got to look at this. And you're trying to filter it. So the AI learns where you're putting these, and it gives like a filter. So it's like when new emails come in, it puts it in specific folders. So I have a folder that it's like if I'm CC'd, it just goes to there. If I've sent emails and I've not gotten a response and I need one, it like sends me a reminder on that. If because a lot of the times you get these solicitation things and you press the unsubscribe button and just ignore it, continue to do it. It's got this folder called Sane Black Hole. So when I get in the morning, instead of having 200 to 300 emails that I have to sift through, I have 5 to 10, and then at the end of the day, I can go through all of my other filters and make sure I don't have anything in those, and it's learning and adjusting every day. So it's like I've saved 2 hours a day just sorting and going through emails with it. There are a lot of people that it's like they're not willing to put in the time to investigate, like, hey, is there a tool that can help me with that? So I think it's people that they want to continue to do exactly what they've done for the past 15 to 20 years. Those are the people that are going to be out of jobs.
Right. That's a good point. So it's not the AI itself, it's people not adapting to the AI. You're learning to leverage it. I think that's a good point. And there's so many out there. There's what is it? Chat GPT, there's Quad, there's Copilot.
Grok. It's just there's just a massive set of opportunities to find additional efficiencies. Chat GPT, you can like handwrite in, I want an Excel formula that will do this, and it will actually help tell you what the formulas are, or it can even give you VBA code for like advanced macros. Like it can out. But if you're not willing to kind of look at and see what's out there, you're gonna miss all those pieces.
'Cause I remember you used to have to take classes just to learn how to do formulas in Excel. That used to be a thing. I would take a couple hour class, intermediate, beginner, intermediate, advanced, pivot tables, formulas. So leveraging AI makes sense. Um, Now I guess we got to get to the one topic is about the Enron and Mahonia, and then maybe what files you were looking at that led you down that path to just, this is like a big, feather in your cap of what you had done.
Yeah, so right out of college, I worked for a gentleman named Tom Myers, and he was involved with a lot of the federal bank regulatory agencies, so the OCC, the FDIC, the NCUA, during the savings and loan crisis of like the 70s and the 80s and all those problem loan workouts. So he wrote those manuals. So he kind of became an expert in that field, and over time that he started doing more like expert testimony in securities fraud and shareholder derivative litigation, typically involving large publicly traded banks. And so and this was 2005, 2004. Discovery wasn't like, oh, you just get it on the computer. So it was literally a moving truck showed up with boxes and boxes of page documents. So literally you're going through boxes to look for stuff. And I would always look at the board meeting minutes to see what was getting discussed, and I was literally going through it, and there was a reference towards that they were syndicating this Mahonia transaction. So that's the other thing. I don't think people realized a lot of the fraud that Enron perpetuated, and the reason it went on as long as it did, is there was a lot of money center bank involvement with that. And there were a lot of special purpose vehicles that were developed by banks that Enron leveraged. So there's one, it's the Mahonia transaction. Essentially, what they were doing is they were disguising short-term loans from banks as prepaid commodity purchases. So when public entities through Edgar and the SEC filing systems have to, upload their annual reports, their 10Ks, their quarterly reports, their 10Qs. And so, you get your statement of cash flows, and you got operating, investing, and financing cash flows. Well, typically you want to see an entity that has strong operating cash flows. If their cash is coming from financing, meaning they're having to borrow it, versus a company that's getting their cash flow from doing their actual business, assuming everything else is equal, you're going to go with the company that has the higher operating cash flow, just because you're going to say, well, they're making money off of doing their business. They're not having to fund it externally from either shareholders or banks or other financial vehicles with that. So they were creating these prepaid commodity swaps, and then future swaps for fixed and floating on the price of oil with third parties. So they break down all the different legs, but when you canceled out all the legs, it ended up being, Money Center Bank will send Enron, $10 million day one, and then in 100 days, Enron pays back to the Money Center Bank $110 million. So principal plus interest.
So they're trying to get their cash flows to look better, and their balance sheet basically look more profitable.
Yeah. So that was, instead of showing the 100 million cash coming in the financing section, they were showing it in the operating section. And then when they'd pay it back, they'd show it that they're paying it out of financing. So people were going like, man, they're making all this money on operations, and they're able to pay down on this debt. So what? There was only one bank that got sniped with that transaction, with the DOJ, and me just going through this, I knew that transaction, and I'm going through it, and I go Mahonia, and then I go, oh my God, and I start looking through this, and I figured out that they were a syndicate and participated in this, that it wasn't just that single bank. That bank was syndicating it to other money center banks. So I pulled all the data, I did the write up on it. Tom discussed it with the attorneys, and about a week later, that bank settled outside of court for a very good.
Very large sum of money, I imagine. Well, they had them in their crosshairs because you found a transaction that was being perpetuated as something it wasn't, to help make their financials look stronger than they really were. And that's the whole foundation. And when you're working with finances and banks, you want to have a financially stable company or bank, and you want to have good cash flows and strong balance sheet, but they were perpetuating under the wrong terms. That's really, really bad. And from that, I imagine a lot of new case litigation came about, and new rules, because they didn't want this to happen again. So I'm sure the banking.
The problem is the regulators are always 2 steps behind the process. So I mean, there has been, like, accounting pronouncements on these variable interest entities and these special purpose vehicles. Like, there's a lot of accounting stuff that's written, but it's written because it was being done, and then stuff like Enron blew up. So it's kind of like after the fact they're addressing it, and it's like they're already coming up with new ways to leverage these transactions. So that's kind of the thing, is it's kind of after the fact.
Yeah, ex post facto, where they say, you're right. They find the problem, and they're trying to catch up to it. Oh wow! So that you've had quite a career, but I'd be remiss not to get to know you personally at a personal level. Maybe you can go through, not birth to where you started school, but kind of talk as much childhood or about you and your background as you're comfortable with. Kind of get people to know you.
So yeah, I'm a Colorado native, and I'm still in Colorado, which is very unusual. Everyone that we talk to has moved here from another state. Yeah, so grew up in the Denver area. I grew up playing hockey, kind of in the Denver area. Yeah, went to University of Denver for undergrad and grad. Started at after I left KPMG, I went to work for PCL Construction, and that's where I met my now wife. It was so my wife is the brains and the beauty of our operation. She's works consulting all over the planet for very different entities. She's subject matter expert in a lot of things in terms of governmental contracts and compliance, and so yeah, she's way out of my league.
Is she a accountant as well, or is
No, she was always on the consulting side. Worked for a number of international firms, and kind of carved out that expertise in that realm. And yeah, so she's and so she up at PCL. PCL at the time was kind of, it was the '08, '09, so a lot of the private, like, commercial work was drying up. So PCL wanted to pursue more governmental construction contracts, and brought her on.
Okay.
So that's yeah. PCL's always a special place in my heart, because that's where I met.
I imagine it would be. Do you still have family in Denver area? Is your family still there in the Denver area?
So that's yeah. My family's still in the Denver area. We got 2 awesome kids. Our daughter's 11, our son's 9. It's been awesome. My daughter does soccer. Son wrestles. I've got them both doing jujitsu in off seasons.
Ah, that's great. Chip off the old block. Now, did I hear that you did you have siblings growing up? Was it just you with your family?
No, yeah, I was an only child, so I think after I was born, my parents decided they wanted to end that bloodline. They didn't want one more one running around.
That's fun. Um, so you said you played hockey at UD, is that right?
No. I didn't play in college. Yeah, I started playing when I was like 5, and then played up through high school.
Through high school, okay. Because I don't remember Denver. I went to school in New York, and we have a big hockey program. I don't remember if Denver had big hockey or not at the university.
And like DU's hockey programs, then I mean they've more national championships than any other college. So it's kind of an interesting thing to go Denver somehow has that many divisional.
I just wasn't sure if Denver is known as a hockey school.
Yeah, it's a hockey school. So that's, and then yeah, my wife grew up in Colorado as well. So we're like one of the, I think we're about the only couple that we know that are both Colorado natives.
Yeah, it's like Florida. Nobody's from Florida. Everybody just lives there. And then did I hear something famous about Denver? Is that where Chipotle started, is in Denver?
And it actually started right next to DU.
Oh, really? Okay.
Chipotle, like right next to DU.
Is the first Chipotle still there, still standing?
Yeah, it's still there.
Now, I'm trying to think, college kids, late night food. Yeah, it kind of makes sense.
Yeah. No. So
That's awesome. So so your family's, you're still raising your family there in Denver, and you do a lot of physical activities. Sounds like you go hiking and you do jujitsu.
yeah, we ski a lot. We've not skied this season because Colorado's got like no snow, which is sad. But yeah, we ski. We do a lot of hiking. We travel a lot. So our kids, even for being small, are awesome travelers. So it's like we've taken them to Australia. We've taken them to Japan, Iceland, the UK, Paris, Italy. So yeah. So
There's no greater gift than travel to kids. What do they say? The memories are stronger than the event itself. That I've heard somebody say. So that memory stays with them forever, and it teaches them the world's a global place. It's not just Denver. Not there's anything wrong with Denver or Florida, but teaches them the world's a bigger place than just where you live.
yeah. That was when we were in Rome last fall. So I had my wife kind of look out for security, have my daughter tape it, but my son and I wrestled on the floor of the Coliseum. So before security got over there. So yeah, they've had some really cool adventures places.
That's great. You've had quite a profound professional life, personal life, and that's led you where you are today. Do you want to let people know how to get a hold of you, and if they want any of your services, maybe?
Yeah. So Breckus Tile and Stone, BREKHUS, tile.com. That's our website. We do extensive commercial, high-end residential, and also just normal like stone fabrication and tile installation, stone installation. Family-run business. Jeff and his daughter Ashley and his wife Daniela. So it's a family-owned business. They've done significant work out at DIA. So if you've flown through DIA and that beautiful like white tile in the Great Hall, they've done quite a bit of the tile work out there. We've done, high-end residential homes in Aspen and Vail. And like I said, we have a retail center. So yeah, for sure. Come on in. My email, we use like generalized emails. So it's CFO@brackestile.com if anybody wanted to get a hold of me.
Spell the Breckus Tile again. I know you spelled it earlier, but just
BREKHUS.
Okay. Great. And then what's your greater Denver area? It sounds like it goes beyond just Denver.
Yeah. So I mean, pretty much all over. So we've done stuff down in Telluride, Steamboat, Vail, Aspen, Denver Metro. So yeah, pretty much anywhere in the state of Colorado we can get to you.
Oh my God, that's great. And again, back in construction again, that's where you kind of went full circle. You mentioned with the construction company. So that's great. And then
No, yeah. I mean, yeah, I think we covered a lot, but yeah, like I said, if anybody has questions or want to talk about anything, definitely find me on LinkedIn, or like I said, you can email me here as well. So
that's great, Justin. Thank you so much for joining us today. I know our listeners are going to love hearing about all the different stories from Enron to jiu-jitsu to personal and how to get a hold of you. So thank you so much for joining today.
Well, thanks for having me, Craig. It was a lot of fun.
Yeah, I enjoyed it. Thank you.
Oh, take care.
Behind Closed Books podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.